Evening accounting students, this is Mr. Chauke. I'm a professional teacher, tutor for accounting, business studies, EMS, as well as research. If you would like me to help you with your academic problems, please get in touch with me by using the details that are outlined in the description of this video. For now, let's get into the lesson of the day. In tonight's lesson, we're going to be looking at how to prepare the correct net profit after tax. And I'll be showing you ways that you can be able to use to get the correct net profit after tax. I hope that after watching this lesson, your accounting problems will be a thing of the past. With that out of the way, let's get into the lesson. Now, whenever you are dealing with the incorrect net profit after tax, these are the things that you need to be able to do. Number one, whenever you are dealing with incomes that have not been recorded, you need to have an idea of how should you deal with this situation. You need to know what are you supposed to do and how will that affect your net profit. Okay, so we are going to try and look at how you can be able to solve that problem. Now, the first thing that we need to be able to deal with is when we have number one, when we have the incomes not recorded. If you are having a income not recorded, what you are going to do is that you are going to increase your net profit. Okay, so you are going to add, and then if we have number two, expenses not recorded, what we're going to do, we are going to subtract, which means we are going to reduce. Okay, so we're going to reduce our net profit. These are some of the things that you need to pay attention to. And then number three, if we have for example, prepaid expenses, these are some of the things that always appear under when you do the correct net profit. Okay, so if you have prepaid expenses, what you're going to do is that you are going to increase our net profit. The reason why we are increasing our net profit is because, remember, when we were making an overpayment, our net profit went down. So when we correct it, we increase it. Okay, and then number four, when you have accrued expenses, what you're supposed to do, you're supposed to reduce. So you're going to reduce net profit. Okay, and then number five, if you have accrued income, what you're going to do, you're going to increase your net profit. Okay, now these are some of the things that you can be able to look at, and then if you look at the adjustments that we are going to do, they are going to be playing around this part. Okay, and then if you have maybe I think the last one that we can look at is income received in advance. Income received in advance. If you have any income received in advance, you are going to minus, so meaning that we are going to subtract, we are going to reduce our net profit. And most of the adjustments that we'll be dealing with as we do this question in grade 12, they're going to be focusing on some of these things that I've mentioned here. So you need to make sure that you master this as much as possible. With that out of the way, we can go to the actual question. Now from here, we are told that prepare the refer to information in and calculate the correct net profit after tax, and this is taking 12 marks in the examination. So we need to make sure whether we pay attention to what we are given. Now most of the time, what they are going to do, they are going to give you some extracts that you are going to use. And remember, they said we need to focus on extract number E. And here they're saying that the net profit was 1,810,404 before the following adjustments were taken into consideration, meaning that this was the net profit before these adjustments were applied or were taken into consideration, as they said here. Now what we need to do is to go and record this net profit, the incorrect one. You start by it, and then from there you're going to make some corrections after writing it. Okay, now let's check in the answer sheet if it's written for us. They have written it for us, so which means that we're just going to go and enter the information from the adjustments. Here they're saying that interest on fixed deposit is earned at 10% per annum and is not capitalized. When they are saying that interest is not capitalized, they simply mean that interest is not added to the fixed deposit balance after it matures. Okay, and here they're saying that no interest has been received, so we have not received any interest. And then remember, here they're telling us that this interest is earned at 12% per 10% per annum. So what we are going to do, we are going to go and look for the information about the fixed deposit. The fixed deposit that we have here is 504,000. Okay, so meaning that interest on fixed deposit was not recorded at all. So what we are going to do, we are going to go to our answer sheet and then say interest on fixed deposit, or we can say interest income, and then we say 504,000, and then we multiply it by 10 over 100, and then we multiply it by 12 over 12. The reason why I'm saying 12 over 12 is because this is for the entire year. And then what is this going to do? This is going to increase our net profit. So we can just say 504,000, and then we say multiply by 0.10, so that we can see how much we are going to get. Okay, and then our answer here is 50,400. So which means that we must increase our net profit by 50,400. Remember, this income was not recorded at all. So when it's not recorded at all, what do? You increase your net profit. And then I've highlighted this in my notes when I was starting. I said if income is not recorded, you are going to increase the net profit. So you see, this applies to what I was saying. So we move on to the next transaction. Now the next transaction tells us here, they're saying that interest on loan was also not taken into consideration. So meaning that the interest was not shown effect on our net profit. Okay, so what we are going to do, we are going then to go and look for how is our loan constructed. Okay, now here they're saying that interest on loan is capitalized, meaning that the interest on loan is added to the loan balance. And then we are going to come here. This is the loan that they are referring to, and we want to understand what is the interest on loan. What is known to us is that opening balance minus repayments plus interest is equals to closing balance. So then what we're going to do, we're going to take we're going to do the reversal. We're going to take this, and then where we supposed to normally add, we plus. Okay, so we're going to say this plus this minus this, it will give us our interest. So when you do your interest, when you show calculations, you are going to take the closing balance, which is 709,200. Okay, so let's quickly do that. So in terms of interest on loan, you are going to say 709,200, and then you say you subtract bargain, you add back the payments. Okay, you add back the payments, which is 223,200. so we're going to add 223,200, and then we subtract the opening balance, which is 846,000. And then from there, remember, interest on loan is an expense, so it's supposed to reduce our incorrect net profit. So what we're going to do, we then check. So we're going to say 709,200, and then we say plus the repayment of 223,200, and then we then say minus 846,000, and then it is giving us the answer of 86,400. So which means that our interest on loan, it's supposed to be 86,400. okay, then you are done with this part. You've shown how you got your answer. Now, one thing that is also important when you deal with such questions is that you need to show how you got your calculations. Very, very important. Remember, in accounting, we pass by earning part marks. So we are done with the second adjustment. Okay, now from there we go to the next transaction. Here they're saying that provision for bad debts must be adjusted to 5% of the outstanding debtors, meaning that we are going to take our debtors control and multiply it by 5% to get the new balance. So let's see how much the new balance will be. So we're going to take 5% of the debtors control. Okay, so let's see our debtors control from the trial balance. Here debtors control is 64,800. So we're going to take 64,800 multiply by 5%, multiply by 5 over 100, and then we'll see how much we are getting. So 64,800, and then we say multiply by 0.05, and then it is giving us 3,240. So our new balance here is 3,240 as indicated here, as you can see here. So now what we're going to do, we're going to compare this with the old balance and see if it's supposed to reduce or increase our net profit. So now from here we can tell that the old balance is 3,420, and then the new one, the new balance is 3,240. So you can see that the new one has decreased. So there was a decline, which means this will increase our it will increase our net profit. So we're going to say 3,420. okay, so here we're going to say provision for bad debts adjustment, provision for bad debts adjustment, and then we say 3,420 minus 3,240, and because the new balance is decreasing, this will increase our net profit. So we're going to say it's going to be a plus. So let's see, this answer minus 3,420, and then we'll see how much we are getting. The difference is 180. okay, let's see, 3,420 minus 3,240, we are getting 180. So which means that our net profit is increasing by 180. We are saving more money on providing for our debtors just in case they don't pay. So our net profit goes up. Okay, why? Because this is an income to us. So now let's see the next adjustment. So here they're saying that rent income received amounted to 94,608, and then it included the rent for March and April. So we can already tell that the rent has been received for 14 months. Why? Because we are starting our year on 1 March 2019. okay, so now we have received the rent for 2 months in advance. So what we are going to do, we are going to check firstly if there was any increase. Here they are saying that rent was increased on January. 2020. When it's like this, what you can do, you draw a timeline. Okay, so now I'm going to draw that timeline, and then would have March, April, May, June, July, August, September, October, November, December, January, February. Okay, this is here where we are supposed to end our year. Now we have extra 2 months, which is March and April. Okay, and they said our rent increased here on the 1st, which means that our rent on the 1st became 115%. So we're going to take that into consideration. So which means here, from here, rent was 115%. Then we're going to check how many months before the increase. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So which means we have 100 times 10. 100 times 10 is equals to 1,000. We can just verify. 100 times 10 is 1,000, and then from there we are also going to say plus 115 of the 4 months that we are talking about. So 115 times 4 is equals to 460. So we're going to add this plus 460, and then we will have 1,460. Now what we want to get rid of is the 2 months. Remember, in our information they told us that rent received amounted to 94,608, and then they said it was received up until April, so which includes those extra 2 months that I was referring to. So what we're going to do, we're going to say 115 times 2, which will give us an idea of what to do. 115 multiplied by 2, it is giving us 230. So we're going to say, in our calculations, we're going to say 230 over 1,460 multiplied by the rent amount is going to tell us how much we are supposed to subtract, which is 94,608. So we're going to say multiply by 94,608, and then it will tell us how much rent should be deducted. So 230 divide by 1,460, and then we say multiply by 94,608, and then it is giving us 14,904, which means that we are supposed to subtract 14,904. This must be subtracted. Why? Because this income was received in advance. Then remember I said when income received in advance we minus, so we're supposed to minus that 14,904 from our workings. Okay, so but we need to show our workings, so we're going to say rent income, and you show that you said 230 divide by 1,460 and then multiply by 94,600, and is it 94,000? Let me just check something. 94,608. So which is what the information that we have recorded. Okay, so you are going to show it like that, and then you are going to earn marks for showing this calculation. So let's just confirm 230 divide by 1,460, it is giving us this amount, and then we multiply by 94. We're going to multiply this by 94,608, so which means it's the correct figure. Okay, So we're still getting that 14,904, which means our calculations were correct. Now after subtracting that, you're going to put this in amount. Remember I said income received in advance must be subtracted, so which means we are going to subtract 14,904. okay, and then we'll be done with this part. Then we move on to the next transition. It's very important that when you practice, you take your time. As you see, I'm not rushing because I'm explaining to you and I want you to understand. The next one says that the trading stock of 25,200 was damaged by a storm. So this trading stock was damaged by a storm during the year, and then they're saying the insurance company accepted the claim and will cover 70% of the claim. And then they are saying that the insurance claim will be processed during May 2020. So now what's going to happen is that here the part that they are interested in is the loss on insurance claim, that 30% that we are losing. That's what they want us to show. Okay, so we can call this a loss on insurance claim. And then would show that it's 0.30 multiplied by the amount that we are given of 25,200. So let's see, and remember this loss to us, it's an expense, so which means it will reduce our net profit. So 25,200 multiplied by 0.30, it is giving us 7,560. So which means that this 7,560, it will be subtracted because we are losing money on that claim. We are not going to get that, so it's a loss to us as a business, hence it is reducing our net profit. Remember, a loss is an expense and then it reduces the owner's interest in the business. Okay, now let's go to the next one. Here they're saying that insurance includes an annual policy of 15,120 paid on 1 August 2020. When it's like this, what you do, you just check when does your year start. Okay, remember, if they're saying it's an annual policy, which means this is for 12 months, so we can just look at the information and check where does this start. So we are going to go back to our timeline. August starts here. Okay, maybe we can use a different pen. So August starts here, meaning that we are going to start counting from here, from August up until the end of the year. This is what we were supposed to cover. So it was only supposed to cover August, September, October, November, December, January, February, meaning that it was supposed to cover 1, 2, 3, 4, 5, 6, 7. So August, September, October, November, December, January, February. It was supposed to cover 7 months, but this covered 12 months. So which means if we say 12 minus 7, and then we'll be left with 5, and then this 5 will be prepaid. It will be a prepaid expense. Why? Because remember, from February up until the end, if we started on 1 August, we will end, it will be August, September, October, November, December, January, February, March, April, May, June, July. So from August, from here on February up until July, so it will be from March, April, May, June, July. So it's 5 months, which means that the 5 months that I'm referring to, it is prepaid. So what we are going to do, we are going to take the insurance amount from here. You are going to say 15,120 divided by 12. Okay, and then you show your calculations in the answer sheet to N max. So you are going to say insurance, and then you say 15,120, you divide it by 12, and then after that you multiply the answer by 5, and then you do what? Remember, this is a prepaid expense, so which means it will increase your net profit because at first it was deducted. Okay, remember from our notes I said I mentioned that whenever we are dealing with a prepaid expense, we are going to increase the net profit. So which means we are going to say 15,120, and then we divide it by 12. Then it is giving us 1,260, and we are going to say 1,260, and then we multiply it by 5. It is giving us 6.3, 6,300. So which means we are going to increase our net profit by this 6,300. And then once you are done with that, you go to the next one, and then most of these transactions will have 2 marks because of calculations. The ones that are not straightforward, they will have 2 marks. And then here they're saying that directors fees of 9,000 were still outstanding on 29 February 2020. Remember, I said in terms of accrued expenses, what we are going to do, I said accrued expenses reduce our net profit from the notes that I made at the beginning. Remember, I said accrued expenses will reduce the net profit, so which means we are going to reduce our net profit as stated before. So we are going to say accrued expenses, or we don't have to say accrued expense, or we can just write it as the name of the account, directors fees. Okay, so we can write that. Is it directors fees or audit fees? Let me just confirm. So we can just go there to the question and check. It's directors fees. Okay, so we're going to say directors fees. Remember, directors fees, because it's an accrued expense, is going to reduce your net profit, so which means it will be minus 9,000. Our net profit will go down because the expense was not recorded. Now here they're saying that income tax for the year amounted to 483,120. Income tax, like an expense, reduces your net profit, so we're going to have income tax here. Income tax, and then we are going to subtract here that 483,000. Let me just check. 483,120. Okay, and then from there, what we do, we can then do our calculations and get the correct net profit. So we're going to say to put all this information, 1,810,404, and then we subtract 50,400, and then we also subtract, we're not supposed to subtract, my apologies for that. So we're going to say 1,810,404, and then where there's an addition we add, so we're going to say plus 50,400, and then we are going to subtract 86,400 for the interest on loan, and then we are going to add 180, and then we're going to say minus 14,904, and then we are also going to subtract 7,560, and then we're also going to add 6.3, and then we're going to subtract 9,000, and then we also subtract 483,120, and then our correct net profit is supposed to be 1,266,300. Now, the answer that we have here is 1,266,300. So this is how you simply do that you correct the net profit. This is how you take out the mistakes. Okay, the summary that I have provided here as what will make life easy for you. If you keep this in your heart, you'll be able to master how to correct the incorrect net profit, and I promise you that you'll be able to do well in your income statement and also in the balance sheet. Why? Because some of the things are related to those two topics. So if you want me to tutor you personally for accounting, you are more than welcome to contact me using the details that are currently displayed under the description box of this video. Thank you so much. May God richly bless you. Shalom.